starting a new week on ASMR Money Mentor. So I'm so glad you guys are here. For episode 30, 31, and 32. But before we get started, just a little bit of a recap from last week. You know, being a guest on the How Am I Doing segment of the Susie Orman Show, again, was really a great experience for me at that point in my investing career, which, as you know, is about halfway from what I consider being my goal of attaining financial independence, which happened in 2020. It was such a great, again, experience for me to have a benchmark to see, really, from somebody else's perspective, how I was doing. And we also talked recently about having accountability partners. So I think it's so important in our lives to make sure that we talk to people about our finances to some extent, because it's always good to express how you're doing with money, because in our society today, as you guys know, not many people like to talk about money, which is why I created this YouTube channel. And it's unfortunate that people don't like to talk about money, because how will we know how we're really doing if we don't have comparisons with other people? And that can be seen as maybe a healthy comparison at times, but unfortunately it's more of a negative comparison, because we're trying to keep up with people because of the cars that they own, the vacations they take, the houses they have, and onward, right? It never seems to end. And so that's why I like to remind all of you all the time that this is what we should aspire to be: a millionaire next door. And I'm not implying that we will all get to $1 million status per se. I'm suggesting, however, that we are very proud of what we have done with our finances, and we don't have to show people from a flashy perspective how well we're doing. That we know within ourselves that we're doing okay, based on the fact that we're following all of the basics of personal finance. We're getting our emergency fund up. We're contributing to our 401k if we have one, maybe to the match, and maybe more, which is about some things that we're going to be talking about this week. Maybe eventually we open up a taxable account. Maybe we have a health savings account. But we're doing those types of things that truly are the basics that will get you to a very good place that you want to be. And in fact, I was listening back to one of my episodes in the past where, do you remember I was talking about 2009 and how dramatic I was when I was saying that we should leverage opportunities, and there were people in 2009 that leveraged opportunities, and that's very true for people that had a lot of money back then that could have taken maybe a chunk of change, and let's say they buy a real estate property that's valued very low, and then they sell it when it goes up. Looking back, I wish I did have about $50,000 laying around in 2009, because I probably would have purchased one of these condos here that was valued at like $45,000 or $50,000, right? Why not? But we always have to remember, with personal finance, we are where we are when we are supposed to be there. And we can't leverage opportunities if we don't have the ability to leverage it. So in this episode, I just wanted to share with you briefly before we get started that in 2009, what I was really trying to say is that my goal was to leverage the opportunity, but the opportunity really was that I was trying to max out my retirement accounts. Doesn't sound like that big of a deal, right? It wasn't like I was leveraging an opportunity to buy millions and millions of dollars worth of properties. So, again, I just wanted to definitely put that into perspective in terms of we have to go towards what I like to call our personal best. I'll probably have episodes about attaining your personal best if I haven't dropped them already, because I'm producing these episodes in advance and then kind of backtracking and filling in episodes during the week. But anyway, that was on my thought before I got started. So this week we're moving on to 2013, and this episode, as you can tell, was called "It Was an Amazing Year in the Stock Market." It truly was. And the next episode will be how you can max out your retirement accounts, because I just said that really was my goal for multiple years. Remember when I said that personal finance isn't that flashy, right? It's very basic. People get confused over basics and making personal finance too difficult and too challenging. In fact, I would argue that in some cases, we may not even need a financial advisor. Now, there's nothing wrong, as I've probably talked about before, having somebody help you, but, look in the mirror, do the research, maybe hire somebody on an hourly basis or something like that. But sometimes I think they try to increase their value and make it seem like personal finance is difficult, when really it's not. Okay, that'll be for another episode. Anyway, so the next episode, again, is how to max out your retirement accounts. And then we're going to end this week with looking at my numbers for 2013. And I think that episode will be titled something like "These Numbers May Not Predict Future Results, but They Could." In other words, as I always say, we don't know what's going to happen in the future, but at least we know that the stock market has usually proven an upward trajectory in the long run, as far as a long-term period. So, again, 2013, my goodness, it was amazing. So I'll share that with you in a couple days, in a couple episodes. Now, remember, in 2012, my portfolio returned about 12%, which is not bad. That is above the average in terms of what portfolios can do within 1 year to the next. But 2013, it really was a banner year for the Dow Jones Industrial Average. It was up about 26%. The S&P 500 actually did a little bit better. Investors were pouring money into the stock market. Nobody really expected 2013 to be such a great year. In fact, in the beginning of the year, there were some people that thought that the market would really go down. Because think about it, I remember in those years, I kept thinking, when is the recession coming? When is the recession going to come? Now, we were just out of 2008, so I didn't think it would be in 2013. But it was interesting that the stock market actually did better than a lot of people thought. The surge in the stock market prices also makes people feel a lot wealthier than maybe we are. Does that make sense? Because when we're in really good times, when the stock market is up, like right now in March and April of 2024, everybody keeps thinking the stock market will continue to go up, and that is not always necessarily true. So back in 2013, always been pretty, as you know, conservative in my spending with the big ticket items like transportation, food, and housing that we talk about all the time. I always thought it was funny that, in good times people spend more, whereas my mindset has always been, oh, I need to hoard this cash for times when it may not be that good. But you know what? We're not like most people are.